Most business owners check their bank balance to see if they're winning. That is like checking the scoreboard of a game, but only looking at the number of fouls. Your bank balance tells you what you have, but your profit and loss statement tells you if you're actively keeping it. In 2026, revenue is a vanity metrics, but real-time visibility is the competitive requirement. If you wait until the end of the month, the end of the year to look at your P&L, you aren't a CEO of your company. You are a passenger. And so today I'm breaking down the P&L basics of a real profit and loss statement of one of my companies that every business owner needs to master this year. And I need you to stay till the end because I'm going to reveal a few of the invisible tax changes from the 2026 from the OBBBA, the One Big Beautiful Bill legislation, One Big Beautiful Bill Act, One Big Beautiful Bill. Yeah, you got it. That legislation that could literally double your equipment deductions this year. So let's get into the math. Even if you're not a mathy person, these are the basics that you need to understand. Your profit and loss statement tells a story. Okay. At the top, it's going to say profit and loss. Okay. Then it's going to say the company name and it's going to have a date. Always look at the date because you may be looking at one day, 1 week, 1 month, 1 quarter, 1 year. So you need to be able to tell the amount of time. So this profit and loss statement is from the space, co-working, and event venue. This is one of my small business ventures that is office space and event rentals. February is a pretty slow month for events for us, but they were still a little bit profitable. So at the top of the top line is your income. So your gross revenue, right? And it's a move. The whole P&L is a movie of your business over a specific period of time. So it tells you exactly where your money went and why it didn't stay in your pocket. But the top part of it is the income line, okay? And so we will link this P&L to the show notes if you are listening on podcast platform or you want to pull it up later. But this shows you the top line revenue. So for 1 month, February of 2026, this business brought in $5,156. Okay. So we'll say $5,000 for easy numbers. All right. But 87% of business owners in 2026 are seeing stable or growing revenue. But revenue is just the beginning of the story. Okay. Because with price sensitivity at an all-time high this year, you need to track not just the revenue, but also how much your revenue per lead, like by the source. So what marketing channel is driving this top line revenue is like next level. So I'm getting the revenue. Where is the revenue coming from? Where is my new revenue coming from? So recurring revenue versus new revenue. And if you want to stop guessing and start leading your company with actual data, hit the subscribe button right now because every week I'm here helping you turn your financial reports, your human resource reports, all the information you're gathering as a business owner into a roadmap for a 7-figure growth plan. All right. The middle of your profit and loss statement is what's called cost of goods sold, okay? And then your operating expenses. So the difference is the cost of goods sold is the direct cost of delivering your product. So if you don't sell, you don't have this cost, right? If you're having to buy a product. Well, this is a service-based business, so we don't have any cost of goods sold. Our biggest expense is just the rent of the building, right? So there's no cost of goods sold for this company. But if we were to have payroll, so in our other companies, we have payroll expenses, and those go under cost of goods sold. If it's materials for a classroom, that's cost of goods sold. If you have to buy parts to build something that you're then selling, okay, that is your cost of goods sold. Your operating expenses is the cost of keeping the lights on. So in this P&L's example, that is cleaning. We have our dues and subscriptions, so our software that help run the business, our insurance, interest we've paid, license and permits. We had to get our business license for the year. Any office expenses we have for like copy paper or pens or pencils, our trash. we have a trash service that we use, the utilities, and then any processing fees that we use QuickBooks for billing for this business. And so that is what falls into your operating expenses, okay? And we're seeing a massive shift in the small business industry right now into AI bookkeeping tools. And there are tools out there like Layer Next and Zenny, and QuickBooks is actually adding their own AI tools in, and they're providing real-time P&Ls. So if you're still waiting 15 days for a month-end close, you're operating on old data, okay? You need to get yourself into a situation and make strategic decisions so that you can get information quickly, at minimum once a week, on how your companies are doing. All right. And then the secret sauce here is your depreciation and research and development. So these are two things that happened in the one big beautiful bill that I mentioned earlier that got passed under the Trump administration in 2025. And there's 100% bonus depreciation. So if you're buying equipment, property, things like that, you can go ahead and depreciate it all in 1 year. And then you can also, there's an immediate research and development expenses that you can depreciate. So your P&L sometimes may show a loss on paper because you bought equipment or you did research and development, but that can be a strategic move, and it's legal to wipe out your tax bill. And honestly, that is how the top 1% play the game. Okay. That is how they get away with not paying the amount of taxes that would normally affect those of us in the middle class, right? Because if your P&L looks like foreign language and you're terrified already what your 2026 tax return is going to look like, we can get you some clarity. I have a few spots each week that I reserve to book calls that are free with other business owners, and to help them look at this and actually figure out how to make sense and how to make the next best decisions. So there's a link in the show notes, because we can make sure that your business is built for profit and not just busy work. You do not have to be a slave to your businesses forever. There are ways to design them that we've learned from those that have come before us, right? I don't have all the answers, but I have learned from some amazing mentors and been able to grow myself from a busybody to someone that can actually lead and strategically reflect on business decisions and decide what's next. Because, the goal is like a healthy business profit margin. I think this is a question I get all the time, is how much money should I be making, right? And it's going to be different if you're in retail versus service-based businesses. Every industry is different, but on average, the statistics show a healthy business profit margin for small businesses in 2026 is between 7 and 10%. I will tell you that all of my businesses operate with a 12 to 15% goal, and we are a service-based business. A lot of retailers operate around a 5% margin. So I have friends who have businesses that are running at 60-something% margins. So it all depends on the size, the scale, and what the infrastructure on the back end looks like for your business. Because the invisible change, right, that I mentioned at the beginning, that you can also do to help with your tax and your tax bills, and to not cover up the income, but legally deduct the income that's showing up on your profit and loss statements, is there is a new enhanced QBI. So it's qualified business income. So you get to automatically write off the first 20% of your income. And now it's permanent. It's easier to qualify for that. And that means more of that net income, that bottom line income, stays into your bank account and doesn't go back to the IRS at the end of the year. Because revenue, I built a 7-figure business, that's for ego. Profit is your legacy. How much are you keeping of it? So stop being impressed by how much you or someone else is making on that top line, and start being obsessed with how much you get to keep on the bottom line.